Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the Chinese now see a real prospect of a trade deal with the Americans. But firstly, in the US, productivity unexpectedly fell in the September quarter, and by the most since 2015, as output increased by much less than the number of hours worked. Their expansion has turned unproductive, which is somewhat of an ominous sign. And China announced that it and the United States have agreed to cancel in phases the tariffs imposed during their months-long trade war, but they didn't give a timetable for the rollback. But that has helped Wall Street post gains today, with the S&P 500 up 0.5% so far. European markets are up a little more overnight, and yesterday Shanghai and Tokyo were flat, but Hong Kong was up a healthy 0.6% on the trade rumours. The ASX 200 rose 1%. In Japan, the recent typhoon has knocked their service sector, with its expansion suddenly stalling in October. Their recent GST price hikes probably didn't help either, as many purchases were brought forward. A bounce back in November is likely, however. The latest EU PMI survey shows that the bloc remains stagnant with no expansion. Germany is the drag there, with industrial production falling faster than expected, and even the German services sector has stopped expanding. France is the bright spot. EU retail sales are still growing faster, however, at 3% annually. In England, their central bank kept its benchmark policy rate unchanged at 0.75%, but two voting members broke ranks and voted for a rate cut, in a sign of worries about recession there. And there are signs the UK government is about to release huge fiscal stimulus with some serious deficit spending. Australia has posted a better-than-expected trade balance on the back of high iron ore volumes. And the US Treasury 10-year yield has now risen further, now at 1.94% at its highest level since July. Gold has slumped further, down more than $19 today so far, and now at $1,465 an ounce, which is another 1.3% dive in the day and takes the fall for just the first week of November to 3%. US oil prices are firmer again, now just over $57.50 a barrel, while the Brent benchmark is just over $62.50 a barrel. And the Kiwi dollar slipped back a little to 63.5 US cents. On the cross rates, we're a 0.5 cent lower again to 92.1 Australian cents, and that's actually the lowest level in a year. Against the euro, we're little changed at 57.5 euro cents, and that puts the trade weighted index down to 68.6. We should also mention that the Chinese yuan is rising fast in the past few days, pushed by Beijing authorities back to the 7 to the US dollar level, and probably part of their negotiation to get the tariff deal over the line. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.